following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis, from Hong Kong, China. Darker than a witch's broomstick. As I look out the window, it's very, very foggy here in Hong Kong. You can hardly see the other side of the bay, so it's very, very, very foggy out here. A little bit of rain, too. First of all, we're going to start off here with the stock market. We're up 12% off the bottom. The Dow Jones is now up on the year, I believe, by a small amount. And what we want to see is where we stand here, with the cycles and some of the patterns that we're looking at. It looked like we were going to stop exactly at the 61% retracement as of Monday. We backed off a little bit on Tuesday, and of course the Federal Reserve came out and said, we're going to have free money forever, or whatever they said, and of course the markets took off quite a bit, started by the collapse of the dollar, which broke quite a bit from its highs. But actually the dollar's not nearly as bad a shape as you might think. If you looked at the longer term picture in the dollar, it's making a really nice ABCD pattern. But let's stick with the stock market here and try to find out what the heck we're doing, folks. If this is Friday, it's triple witching day, which is always options and everything expires, so you don't want to get involved with that part. It used to be wilder than it is, but it's not nearly as bad as it is that it used to be. But it's still something to take into consideration, when we're looking at these things. We want to pay attention to the patterns, particularly if you look at this Dow Jones chart. If you look at the CD leg that we made way back in August, after we had that the big collapsing bottom. The CD leg on that move is exactly equal to the CD leg that we have going on right now as we speak, as the Dow got up to this 17,400 level. That's pretty much what you're looking at. That also would complete a 135 pattern. That's the pattern that was popularized by Roy Longstreet, where you have the lower tops that come in. So that's there's always that possibility. So if you want to buy stocks, at least wait until Monday. That's what I would say. I mean, you're up 9 weeks in a row, and that in itself is an outlier event. And for the Dow to be up 12% in a month is also an outlier event. Now, as we go and as we look at some of the other indices that we usually look at, the first one I want to show you, and the one that we like quite a bit, of course, is the is Twentyman and his Jim Twentyman line, and he was kind enough, to forward this on to us so we can take a look at it. You'll notice that this Twentyman line now is coming in right at where we were after the bottom was made, way back in August. It's touching that, and so that's a very interesting spot to look at. It's also pretty close to the exact 786 of that move that we had just recently, and that's over the last month and a half. So watch that very, very closely. This is not a time to be buying, in my opinion. I can certainly be wrong, but this is the time if you want to be a seller. This is when you want to fish or cut bait. Boy, you got a lot of things telling you that this could be a really good spot, to take a look at these things, from the short side. But we'll watch it as we go through. We want to take a look at the NASDAQ, because the NASDAQ is very interesting, because yesterday we made we made a higher high by about 1 point overnight at around 1409 or 4409. And that was an exact 61% retracement of the high that we made back in December. So that one is still looking relatively bearish. it's a bear market rally under any circumstances unless we explode above another 100 points from in the Nasdaq, which is certainly possible. These markets, given the fact what the Federal Reserve is doing, can do almost anything that they want to. History is going to go back and look at it and say, wow, how did you believe this stuff? And maybe that's wrong, maybe that's right, I don't know, but that's just what I see, and that's what history tells me. So we will keep an eye on these. But the Nasdaq has been the laggard. Remember, it was the leader all the way up. It was the last one to top. And whether that's going to be the way this time or not, I am not sure. But I'm just showing you the charts. That's what the patterns are, telling me. That's the one thing about the patterns. You don't have to trust words. You don't have to trust actions. But just look at the patterns, because they can't lie to you. If there's more buying, prices are going up, and certainly there's more buying now. So prices are all going up. My suggestion to you is to at least wait until Monday, and see what happens with the market then. Because if we're really strong on Monday, then all of this Bradley stuff is going to be for naught. And it does fail. There's no question about it. There are times when it just doesn't do what it's supposed to do, and that is predict what the market's supposed to do. But it does a pretty good job, most of the time, looking at these things. So just keep in mind that that's what we have going. And if you have something, I know someone's asked me a question about Facebook, and I'll cover Facebook as the next chart after we get through with this. But if this is really a new bull market, and I'm not sure that it is, if this is really a good market, the places, that you'll be able to buy stocks really cheap that were hammered down quite a bit is the biotech index. And you can see here how weak the biotech index is. With the market up strong this week, this market has got hammered again. It's almost making a double bottom. This tells you this market is very, very weak, and it used to be the strongest group on the board. It was the latest one to top, which was back in July. The rest of the market, topped on May the 19th, and this one didn't top until July 14th. So this has been the big, the biggest mover of all. This thing got up to almost 400. It's backed off to around the 240 level. And remember, that started at about 85 way back in in 2009. So this will be the thing to look to be a buyer if you want to buy anything, and that would be this biotech index. To see if that's going to be the case or not. Okay, now we'll move over to Facebook. We've had a question about Facebook, and all I have to do is to find it, and sure enough, I got it loaded up, and we'll be able to show Facebook in here. Here's another stock that has been very, very strong. It's one of the FANG stocks, of course, Facebook, Amazon, Netflix, and Google, and it also was weaker yesterday. We made the 786 retracement on this move, made a small 3-drive pattern on the daily chart, as you can see from this particular diagram, but it's a weaker than market stock. It used to be one of the biggest ones, and here again, we didn't top on this one until February the 1st, and then we had the big sell-off and then the rally back, and so we'll watch this one closely. In fact, all of these, the Amazon, Netflix, Google, all the FANG stocks are lagging the market. Mainly, it's a lot of the laggards that are lining up this way. So on Facebook, I certainly wouldn't be a buyer. However, if we get above the 113 level, this would set up a lot higher prices. So 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed With TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the gold market here this morning. I posted the chart in here before the Fed meeting because, you know, we'd made that top up here on the Asian market up around that 1288 level the other day on February the 10th. And then we've sold off, and we were looking at these support points to come in. As you can see, the 61% line came in at the 1224 level. We got down to 1227 is what happened in the gold market. And what I want to try to show you what I'm watching when I'm looking at gold on a shorter term basis, because it does a really good job of pointing out, you know, some of these numbers and patterns that we're looking at. So the next chart that we'll look at here is the same chart. It's a 4-hour chart of the gold, and we're bringing it up to date. And the reason why I wanted to show you this is you'll notice that the support that came in at the 78% retracement and the 61% retracement of the previous moves down around that 1224 to 1228 level held for 2 days. And then, of course, the Federal Reserve came in, and the gold buyers stepped up to the plate one more time. And then it rallied up to the just a little above the 61% retracement of the previous move, up to that 1273. Now, what's interesting, if you'll notice with those three red boxes that you'll see here on the chart in Tiger TV, if you don't have these at home, folks, it's the high from the 4th of March to the 10th of March to the 17th of March. Those are the three highs. They make a head and shoulders pattern, and it's a very symmetrical head and shoulders pattern. As you can see, we had the exact same time between the shoulder and the head and the right shoulder. And now what we've done is we've backed off, and we've come down to the just a little above the 61% retracement of that move, which would come in around 1244 We got down to 1248 this morning. We're now trading around the 1252, 1253 level. So until we get above this level of 1288, you still have to assume that the gold is still in a corrective mode, to the downside. Now, the move down from the 1288 level down to the 1228 was just about $61. And if you'll remember, the last major correction we had going back into February, back on February the 11th to February 14th, over that weekend, the market dropped $70 per ounce, and then it, of course, went up and made new highs. And so we dropped only $62 an ounce this time. So this is the real critical nature of what we're looking at here in this area. And then we will be able to see if this is going to be the case. And that's the main thing that we're watching. So one of the things that you want to be able to see is if we're going to make it above the 1273 level, that would tell us the first time that we would be doing this move to the upside would make it a very, very positive thing to the upside. Now, I wanted to bring your scenario of this neural network that we got from Larry Edelson, because this thing has been pretty good so far, folks. We have not made new highs, and you have to respect what we're looking at as far as the pattern in this. Let me get this up here so you can see it again. And I'm only using this as a guideline. The patterns come first. The cycle stuff is certainly a secondary thing. The main thing is, that's the main thing that we want to be watching, is the fact that this thing has been working, and we will be seeing if it's going to be hold on one second, folks. I just got an alert on one of my prices, and I just wanted to make sure I got it straight, and then I'll get back to. Okay, I'm all right. All right, we're watching. I'm watching a couple of gold stocks, because we had some interesting things happen in the gold market that look real interesting, and I'll share those with you in just a second. And since that second is up, what we're going to do is we will be ready to. We have a caller in. Yippee! All right, we have Brent from Martinez, California. Brent, are you there?
I am. Good morning to you, Larry.
Good morning from Hong Kong, my friend.
I'm sorry, I didn't catch the first part of your show. I wasn't sure if you're back or you're still overseas. You're still in.
No,
China?
we just got here. We just got here, and believe me, it was one of those flights from hell. The odds of someone dying on an airplane is 30 million to 1. And this is the second time that's happened to me. We had a young lady pass away of a heart attack 6 rows up from me. It was in the middle of the night, and the lady, her friend was with her. I don't think it was her daughter or sister or anything like that, but I think they were just friends, and she screamed, and Carson, it was all kinds of things. And there were 2 doctors on the plane that tried to revive her, but there was no such luck. It happened to me once in 1972, traveling to London. So that's the second time that happens. I don't know if you folks know this or not, but there's a place on these 747s where they have a sick bay where they can put the body away. But boy, you talk about disrupting a flight. Boy, that does it. And anyway, our prayers are with her. She's in a better place. All right, let's talk about something cool. What can I help you with, my friend?
My general question, Larry, was we obviously have the market moving up, and I know we're heading into that. We have the lunar eclipse. I believe it's on the 23rd next week.
Yes.
And I just was wondering your thoughts on that, if you think this could potentially be heading into a top in that during that, planetary aspect.
Well, lunar eclipse have a better predictive ability than solar eclipse, and we get that from our good friend Norm Winsky from AstroTrend. And Norm emailed me yesterday and telling me that he was giving a sell signal within 1 or 2 days of today. So if anything goes wrong, let's blame him, okay? he can take it. So anyway, it looks, everything's there as far as the patterns line up. It really does. The Bradleys, this is the last day of the Bradley model, And the solar eclipse didn't really do very much, which was not unexpected. That was the new moon. It's held the market for 3 days, and then the market after the Fed made a new high. So it's just got a lot of patterns that's telling us that something big is getting ready to happen. But remember, Brett, a lot of times these things don't work. That's the key.
Yeah, I have a lot of things I'll be watching as we head into that date to give me some indication that it might be making a turn. But I just wanted your thoughts on it. So I appreciate that. And I don't know if you've had a chance to talk about oil yet, but if you haven't,
yes, I'm going to cover oil as soon as I'm finished with the gold and silver. I had one other question. How's your rain situation? We see on the news here in Hong Kong that you're getting a lot of rain up in the northern California area. It's been an absolute godsend this year. We've had all our reservoirs are completely full. If anything, they're actually letting water out. Oh, that's wonderful.
And if you look at Shasta, which was a huge reservoir up by it's kind of near the base of Mount Shasta, and it was going up at a rate of 3 feet a day, which is huge for a reservoir that large. And so it's completely full. So the good news is, we're in great shape and pretty much out of the drought. So just have a wonderful day, okay, Larry?
All right. Thanks for calling in, Brent. Certainly appreciate it. Bye-bye.
Bye.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I've posted the chart of silver into the room, and you will not believe this, folks. The high on silver yesterday was 1.618. If you'd like Fibonacci, you have to love that one. Anyway, that completed that big swing up there. I don't know if that means anything or not. It's probably a coincidence, maybe not. I don't know. We're now trading at 1588, so we backed off about 40 cents. So just keep an eye. We need silver to get above that 1625 level to clear some long-term stuff. Now, I wanted to share with you a chart from our friend Peter Brandt. And Peter is an old-time fellow, just about exactly my age. And what he's showing here on his long-term chart here on silver going back several years is a potential for a pattern of a rising wedge that could be looking at it right here. So we'll watch. By the way, regarding that airplane flight, the odds of meeting a doctor on the street are way up 1 in 8,000 to 1, I believe. But the odds of a doctor being on an airplane is 500 to 1, and there were 2 doctors on the airplane yesterday with 400 passengers. So there's another probability of things that you're looking at. But boy, I tell you, it's scary. I happened to go into Google and just to check to see what the odds were on some of this stuff happening, and I saw that the odds of being struck by lightning were 2.2 million to 1 and stuff like that. The odds of dying in an airplane crash are 11.7 million to 1. I mean, these are just numbers, but that's it. Let's look at this chart here from Peter Brandt. It's a silver COMEX chart going back to 2011. You can see the downtrend that we've had here. You'll notice that he's showing the price of 1619. I had 1618. I must be off by a penny. I don't know why it's different, but anyway, we did tag that trend line on the downside. So if it breaks out here, we'll have to wait and see. There's a possibility that that could certainly happen, but I think we wait just to see if till Monday, Tuesday, see what happens, with this because of the smaller pattern that we had in the gold market. And believe me, these things can turn on a heartbeat, as you can imagine, given the fact what the Federal Reserve is doing, with the things that are happening. It's not just the Fed, it's it's the ECB, and all these people are playing games with this money stuff, and I don't know when it's going to end, but boy, when it does, it's going to be one sick puppy. There's no question that is going on in this. I was on a 777 Dreamliner, and there are 4 people in the cockpit. They have a captain, 2 co-pilots, and an engineer. That's basically it. The crew is 22 people on the plane, so it's a big plane. 15.5-hour flight, though. That was it. I have to tell you, the rest of this, you talk about a disaster day of traveling. I get on the plane at Tucson to go to San Francisco, and there's 2 gentlemen in the plane, and there's only like 60 people in this plane because it's a little puddle jumper from Tucson to San Francisco, and they get into a fight. And I mean, there's blood. They're bloody nose, and really hitting each other. And they had to have the police come in off the airport, the national security or transportation people, and it took us 2 hours longer to get the planes fixed because they had to clean it up after we had this big fight. So this was a terrible. No, it was about a basketball, of course. The only reason people fight anymore are basically money, women, and basketball. So that's pretty much what's going on. Okay, someone's asked a question about the gold stocks. I want to finish this because I got to get into crude oil because we're looking at something very interesting in the crude oil as we do have that. But as far as the gold stocks go, if we take a look, and I'm going to put this up so you folks can take a look at it. If we look at the XAU over the last month, you'll notice that we're making a 3 drive to a top pattern here in the XAU. We did back off about 4% yesterday. And this is just a 60-minute chart, so we made our high earlier in the morning, and then we sold off. Now, if we get above this level, then this 3-drive pattern is totally wrong, but this basically is a really nice 3-drive pattern because you have really nice symmetry between the drive 1 and drive 2 and drive 3, and you have the ABCD structure within that, and that's ideally, what you look at. If you remember, one of the things that we posted here the other day is that same type of pattern. And if we look at that mathematically here, you'll be able to see that this is what we're seeing on that 3-drive pattern right now. This is the exact pattern. This is the formula for it. Everything is lined up. Now, I know you see all the stuff up there, and it looks like there's a little too much, but there really isn't. You're just trying to measure, time and price coming together, and that's pretty much what we're looking at on this 3-drive pattern in this XAU. I don't know if it's going to work or not, but this is Mother God and country, so that's all I can tell you. That's basically, what we're looking at. All right, let's get on with the rest. I think I've covered everything I wanted to in the gold and silver. So the next one we want to get talking about here is the crude oil, because we're in the same situation in crude oil as we are in a couple of the other things that we're watching. And all I have to do now is to find it, and sure enough, here it is. And the number in the crude oil to look at, folks, is 41.46 in the April crude. That's the one that we want to be watching. If you'll let me pull this up here, I will get this ready for us, so we'll be able to take a look at it. But that is the 61% retracement of the move that we had from last October. That will take us right up to 41.46. Remember, nobody wanted this stuff when it was $26 a barrel. Now it's $40 a barrel, and everybody wants it. Gas in Tucson has jumped 45 cents a gallon in 2 weeks. We went from $3.15, actually it's gone 50 cents. We went from $1.15 a gallon to $1.65 a gallon in just 2 weeks in the gas market. So you can see that they're playing catch up. So watch the crude. We hit 41, I believe, 41.02 in the April crude, but 41.46 is the exact 61% retracement of that move as we look at it coming into the market as of today. And of course, triple witching affects the options and the futures for the crude, but I don't think it affects. There's no stock options on that stuff other than the options on the stocks for oil, but I don't know how that affects it because they've been a lot different than the others. So we'll see. We got a really strong market starting out this morning, and so we're going to see if this we're up really strong today, which we probably are going to be. And we'll have to wait and see if we are or not. But this early morning is what they call amateur hour, because that's when most people put their orders in, and that's usually the wrong thing to do. The S&P is stronger than the NASDAQ once again, but that still could change at any time, of course, but we'll watch that closely. But today is not a good day to be buying with triple witching hour and the Dow up 12% off its bottom with all these other harmonic things that are there. If you're going to be a buyer, wait till Monday. And if you want to buy something, you can buy something like the IBB where you don't have to risk very much. Some of these other things are so overbought, like the gold stocks and some of the oil stocks. I mean, it's just, they really had one heck of a run. We're also having a major move in the number of stocks advancing versus declining, and those above the 50-day and the 200-day moving average. Those have hit highs for the year and have taken out highs from all of last year. In other words, the strength of that move, the number of stocks running up was very, very strong. So 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market-Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're talking about the crude oil market. And what I've done is I posted an updated chart showing that 41.46 level in oil. That would be equivalent to a 61% retracement of the previous major high we had several months ago. That's just a tiny bit above the 382, the move all the way down from last year, which would take us into about 40.50. So 40.50 is the 382, and we're looking at a potential of the 61% retracement. It's about 50 cents away from where it is right now. So we'll keep an eye on that just to see how it's moving. The overall market is had a tremendous rally, as we already know, 12%, off the bottom. The bottom was easy to find. I mean, that was the ABCD pattern that we had in the New York Stock Exchange Index, and we use that, as our really barometer of what things happening. And we should take a look at that now, because we're seeing a market that is making the same type of equality rally that we had, back in October after we had the August run. We rallied up into October, several months, and here we had our bottom come in around January, and again we're rallying for 3 months. And these are equal rallies. We're a tiny bit above the 50% level from the whole move down, going back in May, but we're at a 78% retracement of the market from October. So this is not the time to be buying. You don't want to be buying something that's 8 weeks up and we've had a 12% move off the bottom. I've been very friendly to oil stocks and stuff for quite some time, and a few other stocks, but this one particularly, I would certainly give it a little bit more time, especially with it being triple witching hour. You don't really need to be a buyer in here. And some of the other indices look, very, very top heavy too. The Dow Jones Transportations are also making a 78% retracement. The Dow Jones Utilities, even though they've been the strongest when you look at them on a shorter term basis, on the longer term basis, all they're doing is making a 50% retracement of the high they made, a year and a half ago. And that topped long before, the rest of the market. So I would say, keep your powder dry for a day just to see how it ends up, and then next week, if it's strong, it could be up 12 weeks in a row. Who knows? These markets go some places, sometimes where you don't believe they're going to go. Remember, it's much better to be out of a market wishing you were in than in a market wishing you were out. That's the old trading paradigm that you want to keep your eyes focused on. That means, hold on to your winners and let your losers go. So we'll watch it very, very closely here if we're going to have a new leg up in this market. Boy, I'll tell you, that'll break a whole lot of technical backs. From the technical perspective, if we make new highs in the S&P 500 and the NASDAQ and the Dow Jones, because those long-term patterns are really, really very, very important. Someone's asked a question about the VIX index. We're down areas where we haven't been for quite a while. The VIX is testing 14 right now, I understand. And remember, just a little while ago, it was trading up around 26. And even when the market was falling, the VIX was not rallying. That's one of the reasons why the stocks look so bullish, back in February and January, is because that VIX index was saying there was no fear in the market, and that's not what's going on. Now, I've had some questions about the bond market and stuff, and what I wanted to do was to show you the chart that we talked about. I believe last Friday before I left here, as we had this market was making a 61% retracement on the notes. That has certainly held. We rallied 2 full points plus a little bit today, and it's made a really significant bottom here at this 128 level in notes. That's equivalent to the 160 level in the June bonds, and that's telling us that there's some type of a bottom has formed that will keep it from going much. That means that rates are probably going to stay low for a little bit, but longer term, these charts look incredibly bearish. Folks, don't forget one thing. This experiment that they're doing with this negative interest rates has never been done before. And maybe it'll work. I don't, mathematically it shouldn't work, but maybe it'll really work this time. We'll just have to let the trading gods decide if that's what's going to be the case, and we'll go from that level. As far as the foreign currency markets, we've had a really good move in some of these moves in some of these markets, and one of the things that we talked about last week with the Fed coming in, I believe we talked about this on the 15th, right before I flew out, that we were making a 38% retracement. It took 4 days for the market to make a 38% retracement in the euro, and that's very suggestive of strong support. And of course, when the Fed came out with their idea of being very, very dovish, that caused the euro to move quickly up to the 113 and change level. I don't believe we're going to see the euro get above the 118 level, but it's certainly possible. We did get up to 117 before, but we went down to 108, and then we're back up to this 78% level around that 114.50. So if we can get the euro above the 118, and maybe the whole scenario of the euro not going to par is full of baloney. I don't think that's right, but you've got to give the boys at the Federal Reserve credit that they certainly put the fear of God in the U.S. dollar bulls when they come out with these numbers. But that's the anticipation of how it occurs. I'm not sure. The British pounds had one heck of a run off the bottom, but it's come into some really strong resistance at this 145 level, just based on, some of the charts that I'm looking at, on a shorter term basis. So we'll see what happens with it, over the next period of time. But we've had a pretty good rally in all of these currencies, i.e. lower dollar, and that's it. And one of the biggest one, of course, has been the Australian dollar. And that one was not a surprise, because our good friend Jim Bartolione down at V50 Partners in Falls Church, Virginia, furnished us this really nice chart a couple weeks ago. And as you can see, we've had one heck of a rally on this Australian dollar. This is a monthly chart, of course, but we've rallied well over 300 pips in this, just in a very, very short period of time. So This is going to be a real interesting day, to say the least, and that's what we'll be looking at as we go through the whole thing, and then we'll find out what's happening. But right now, we've got the stocks moving up pretty good. They're up on the day so far, with the exception, I believe, the NASDAQ has sold off quite a bit, but the rest of them are still holding. We haven't quite made the number yet in the crude oil. Watch it real close, folks, at 41.48, because that's where the big daddy rabbit's coming in, whoever that guy is out there, and he's going to probably put on a half a contract of the crude oil at 41.48 with a buy stop at 41.49. So it's got to be exactly perfect. And if you believe that, we still have 2 shares of the Brooklyn Bridge available for sale. These have an option that you can expand it to 4 shares if you'd like to buy those. Gold so far is holding the 1251 level. Below 1248, I don't think I'd like it very much. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a caller from Toronto. Edward, are you there?
Yeah. Hi, Larry. How are you?
I'm very
This is
good.
Edward
What can
speaking
I?
again.
Nice to hear from you. What can I help you with?
I just want to share a couple of observations, see if I see things the way you would see them. I'm looking at the VIX, and it looks like the VIX is really sitting on a support level, and it could go either way, but if it breaks, it will go lower, and otherwise it's going to go up. And I'm also looking at 30-year bond. If you can take a look at the chart, at a weekly chart, it looks like it is still going down, but on a daily chart, there is actually looks like a completed ABCD pattern, bearish ABCD pattern, but with the immediate higher lows and higher highs. And it is basically sitting, the 50-day moving average just crossed the 200-day moving average. And it looks also like at a point at 2.860 is a point of resistance. If it breaks that, it may go higher. And I understand that the bond, 30-year bond, is a good indication of the overall market, what it's going to do. So would you use this as an indicator to take positions?
Well, yeah, well, not to take positions, but just an overall view of what's happening with money, because, you know, you try to follow the money, what's going on. That's part of what you look at when you're watching foreign currency. But the way you've described the bond market is certainly true. The longer-term weekly is bearish, and the certainly the daily is completing an ABCD pattern also. The $64 question is money going to go to risk on or risk off? And, you know, the risk has been off, you know, ever since February the 10th. And if the risk comes back on again, then the VIX should start to rally from here, and we would be ready to see if the market's getting ready to go down. But I think your analysis of the bond is certainly right. So we got to take a little break here, my friend. So we'll talk to you in just a few minutes, okay?
Thank you very much.
Thanks for calling in.
Thank you, Larry.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.